So, and I would like to reverse the question that you've asked. And first of all, going to start with the amounts that were involved, because there have been lots of things flying in the media. Everybody wakes up with a speculation. It becomes a lead story. So there's a lot of confusion, all right? And it's not good, particularly when you're targeting your central bank to be having that kind of. So I think I need to bring out something, make them clear. I want to be on the record for this, and I'll be held accountable for it. So I'm speaking authoritatively on this. And the second question, there's even this, which is even bad, that Bank of Uganda was hacked. Look, it is absolutely not correct. I repeat, it is absolutely not correct that the BOU IT systems were hacked. Because hacking involves the act of gaining unauthorized access to computer systems and networks. And I can tell you with all the confidence that there is no evidence whatsoever of any unauthorized access to the BOU IT systems to divert the funds that I have just told you about. These fraud incidents were initiated outside the BOU IT systems to divert the funds. Bank of Uganda is a paying entity. You get instructions to pay, and we pay as instructed. So, let me repeat, the fraud incidents were initiated outside the Bank of Uganda IT systems, and instructions were received by Bank of Uganda to pay the wrong beneficiaries, leading to the subsequent diversion of the funds. Now, where the diversion took place, how and who were involved is a subject matter of the ongoing investigation, for which I cannot comment. But be rest assured, the Bank of Uganda IT systems remain fully operational. They are secure and uncompromised. Forget the nonsense out there that the BOU IT systems were hacked. That's my message on that. The BOU IT systems were never hacked. Our systems are operational, they're secure, and they're uncompromised. Now, on the staff involvement, look, whenever such a thing happens, you report this one to the police. And it's only normal for the police to take statements from all the staff who have a relationship or who work on such matters, who take part in the process of payments. So what has happened is that we are cooperating with the relevant authorities to provide information that is needed to conclude the investigation. To the best of our knowledge, no Bank of Uganda staff has been implicated thus far. So all the rumors you see there, all these things in the social media, I mean, there's no grain of truth in it whatsoever. Bank of Uganda staff have cooperated with the investigating authority, and to the best of our knowledge, no staff has so far been implicated, no been named in this. So maybe let me conclude on this. I'm just asking the public to remain patient and allow the relevant government agencies to conclude their investigations. Bank of Uganda will issue a comprehensive report. We will issue very comprehensive report on the incident once the investigations are complete. For now, we recommend that if you want any information, you source it from the related, from those agencies who are conducting the investigations, to avoid misinformation. This idea of bashing the central bank is not good. I hope, Sudhir, I've answered your question. Okay, thank you, Sudhir, for that question. Again, I want to emphasize the fact that investigations are still ongoing, and I would not like to tamper with those ongoing investigations. So in response to your questions, I'm going to give you facts, just only facts, all right? That will of course become known. And these ones we are sure of. So, and I would like to reverse the question that you've asked. I'm first of all going to start with the amounts that were involved, because there have been lots of things flying in the media. Everybody wakes up with a speculation, it becomes a lead story. So there's a lot of confusion, all right? And it's not good, particularly when you're targeting your central bank to be having that kind of. So I think I need to bring out something, make them clear. I won't be on the record for this, and I'll be held accountable for it. So I'm speaking authoritatively on this. Whatever has been going out in the media, everybody is free to speculate if they want, but they should speculate within the confines that's based with information. So I'll start with the amounts involved. You know, there were two transactions which were relating to debt service payments. The payment transactions in question included a payment to the World Bank of $6.134 million, which was instead paid to a company called Roadway Company Limited through a bank in Japan called MUFG. And that was on the 12th of September 2024. And then the second transaction was meant to be a payment to the African Development Fund of $8.596 million. It was instead paid to MJS International, London in the UK, on the 28th September 2024. Now, on the part of Bank of Uganda, upon discovering that the payments had not reached the intended beneficiaries, that is the World Bank and the African Development Fund, Bank of Uganda immediately commenced internal investigations and reported the matter to the relevant government agency, and that was the police, Uganda Police Force, the Criminal Investigation Directorate, and also the Financial Intelligence Authority. But beyond that, Bank of Uganda took the necessary steps to recover these funds. That was really our key priority, that of these funds that had been diverted, how quickly can we get back these funds? So that's what we've been working on. We put all our efforts in trying to recover these funds. So we instructed our correspondent bank, that is Citibank, and the banks where the funds had been credited to the accounts of the fraudsters, instructing them to freeze the said funds due to the suspected fraud that had taken place. We have since recovered $8.205 million. I repeat, we've recovered US dollars 8.205 of the funds that had been sent to MJS International, London, UK. And these funds have been credited back to the Uganda Government Consulate Fund account here in Bank of Uganda. It's not frozen like the media is speculating. These funds have been credited back to the Consulate Fund account here in Bank of Uganda. And we are pursuing the balance of $391,000 that went to this bank in London through, again, our correspondent bank, Citibank. However, Bank of Uganda has not recovered the amount paid to Roadway Company through the MUFG Bank of Japan. This bank has not been very cooperative. That's why we haven't recovered this money. Had the bank been as cooperative as the bank in the United Kingdom. Even this money should have been recovered. So while they haven't been cooperative, we are working hard with our domestic and international partners, particularly through the Financial Intelligence Authority, to pursue the recovery of these funds. And we also expect the ongoing investigations to support our recovery efforts and help us understand the full extent of these fraudulent transactions. But more importantly, we are also cooperating with the Office of the Auditor General, who are conducting their independent investigations. So that is what it relates on the amount of funds that were involved. So forget about all this media speculation on the amount of the funds involved and who took the fund. The media, you wake up with your own story and you put it there, and because Ugandans are looking for such story, they'll buy it. But take this one from me as authoritative. The Bank of Uganda Monetary Policy Committee maintained the central bank rate, CBR, at 9.75%. Domestic inflation has remained subdued. Over the 12 months leading to November 2024, annual headline and core inflation averaged 3.3% and 3.5% respectively. The stability in this inflation is largely due to the previous monetary policy actions that have supported the shilling exchange rate, declining food crop prices due to favorable weather, and the diminishing global inflationary pressures. Specifically, in November 2024, annual headline inflation remained steady at 2.9%, while core inflation slightly decreased to 3.8% from 3.9% in October 2024, driven by a decline in services inflation, particularly in passenger transport services. Looking ahead, Uganda's positive economic prospects, strengthened by capital inflows into the mining and the oil industries, could continue supporting the shilling exchange rate. Along with favorable food and oil prices and decreasing global inflationary pressures, this is expected to keep inflation low. The Bank of Uganda projects that average core inflation will remain below the medium-term target of 5%, averaging 3.7% in 2024/25 and 4.2% in financial year 2025/2026. However, inflation is expected to stabilize around the target of 5% in the medium term. There are, of course, several risks to this inflation forecast. On the downside, inflation could be lower if the exchange rate appreciates, partly due to stronger capital inflows related to the oil development, and also if the global growth and inflation remain low. On the upside, inflation could be higher if global inflation, which is still above target in several countries, reverses its declining trend due to heightened geopolitical tensions. Also, a severe depreciation pressures arising from tight global financial conditions due to potential policy reversals in advanced economies, leading to capital flight to safer havens. Geopolitical tensions, if this intensify, and then the disruption of trade leading to sustained increases in shipping costs or commodity prices, thereby lowering the global growth and further limiting the domestic economy's supply capacity. And if the weather conditions become extreme, this could drive food prices higher than projected. Overall, the risk to inflation outlook are balanced. On economic activity has remained strong with output around its potential. High-frequency indicators of economic activity and business sentiment suggest sustained strengthening in economic activity driven by resilient domestic expenditure. The GDP growth outlook remains unchanged since the October 2024 monetary policy statement, with growth expected to be between 6% and 6.5% in financial year 2024/25 and between 7% and 7.5% over the medium term. This growth trajectory is supported by strategic government interventions, increased foreign direct investment in the extractive industry, and the commencement of oil production in financial year 2025/26. Also, this growth outlook remains under considerable uncertainty. On the downside, growth could be lower if heightened geopolitical risks and potential changes to global trade and fiscal policies trigger additional economic shocks, disrupting trade and supply chains and resulting in higher commodity prices, especially oil. Also, the ongoing tightness in the domestic financial conditions, if this persists, could lead to higher borrowing costs and increased domestic borrowing to finance fiscal deficits may crowd out the private sector and worsen the already limited private sector credit. And also, if the capacity of fiscal policy to respond to emerging global shocks is constrained, we could see growth lower. But on the upside, growth could be higher if government interventions result in improvements in productivity growth, and if investment is stronger in the extractive industry, and also if the global economy picks up, supporting exports, remittances, tourism, and foreign direct investment. And weather conditions that are favorable that support crop production could also lead to higher growth. So again, on the overall, the risk, the growth outlook are balanced. On this ground, the MPC noted that although inflation is projected to remain below the target in the near term, geopolitical conditions and policy uncertainty could contribute to increased volatility in economic activity and inflation in the short to medium term. Consequently, the MPC maintained the policy rate at 9.75%. The bands on the CBR remain at +/-2 percentage points, and the margins on the CBR for the rediscounts and the bank rates at 3 and 4 percentage points respectively. As a result, the rediscounts and the bank rate remain at 12.75% and 13.75% respectively. We think that at the current CBR level, the monetary policy stance remains conducive to sustainable economic growth amid price stability that supports Uganda's socio-economic transformation. Future adjustments to the policy rates will be guided by incoming data and continuous evaluation of risks to inform the MPC's decisions.